Welcome to America's Top Project, a show where 11 Opportunity Zone finalists are competing for 2 coveted awards, America's Top Project and America's Most Impactful. They will be in front of a handful of America's most influential judges in the Opportunity Zone industry. The judges, as well as participants, will choose America's Top Project. And now, welcome your host, Lexi Hammonds.
Thank you guys for joining our pre-event to OpportunityZone.com's first ever America's Top Project virtual showcase. A little bit of history on us. OpportunityZone.com is the country's largest professional network, the leading education and marketing platform, including the nation's only magazine publication, which is known as Opportunity Zone Magazine. You may also know us for our Top 25 Opportunity Zone Influencers Awards, which is where we honor the most powerful OZ professionals who stand out among their peers. So this event follows the success of the company's Sold Out Conference series, and it's actually set to, again, be the nation's largest event in the OZ investment industry. America's Top Project actually debuted in July at our Denver conference, and we received such an overwhelming positive response that drew a lot of attention from developers who wanted to share their project vision. What is unique about America's Top Project is that the competition is able to spur economic development in opportunity zones, whilst almost simultaneously recognizing the most innovative and successful projects that are out there today. We have Jamie Nahan and Scott Albright from Eagle OZ. Let's take a look at that video.
Welcome to historic Bronzeville. Hi, I'm Jamie Nahan. I'm proud to be at the head of Eagle OZ. Eagle OZ is building 264 multifamily rentals across 2 funds. Fund 1 is already under construction with 66 units. Fund 2 is raising $20 million to build an additional 198 units. There are many catalysts in Bronzeville which really build a case for the economic growth expected to happen in the next 10 years. The redevelopment of the Michael Reese Hospital with 8 million square feet of mixed-use space and a $3.2 billion budget expected to have an economic impact of $10 billion. We also have the Obama Presidential Center, which just broke ground this past August, is expected to bring in 700,000 annual visitors with a $700 million budget, creating 7,500 jobs. Tiger Woods recently announced that he will open a new golf course in Jackson Park with an expected $150 million economic impact built to PGA standards. Right here is also the University of Chicago with a $10 billion endowment, home to 35,000 staff and enrollment, 6th best university in the country and 8th in the world. In Bronzeville, we have a brand new Mariano's Supermarket, which is a high-end supermarket here in Chicago, which really shows the confidence that business has in this sub-market. In 10 plus years, Eagle OZ will have 2 exit options. The first will be a sale to homeowners. Our 20% IRR projects a $465,000 sale price to home occupants versus the current market of $350,000, which implies a 2.9% annual home price appreciation over the next 10 years. The likes of Nat King Cole, Gwendolyn Brooks, and Louis Armstrong found their fame here. The Wabash YMCA is here, where Black History Month started, and the Pilgrim Baptist Church, known to be the birthplace of gospel music. If approved by Congress, Bronzeville will be allotted $10 million to preserve and maintain its historical buildings and traditions. We are honored to do our part to preserve this corner of American history.
Hi, I'm Scott Albright, co-founder of Eagle OZ and general contractor. The name of my company is Green Day Construction, and we're building the projects located here in Bronzeville. We're building 99 buildings. These are all masonry, incredibly energy efficient buildings. They have open floor plans, stainless steel appliances, granite countertops, solid surfaces with industry best materials. These buildings are built to be incredibly maintenance free and last an incredibly long time and keep the utility bills low for the tenants that are going to be staying there for a minimum of 10 years. Oftentimes we're asked how we're able to build these buildings for $210 a foot. We're able to do this through volume discounts on material and labor. We are creating thousands of construction jobs and property management jobs in this space and creating an incredible amount of housing in a market where it's sorely needed.
We recently won the award for America's Most Impactful Project at the Opportunity Zone Expo, recognizing our efforts to create jobs and housing. Eagle OZ follows green standards, building energy-efficient buildings from LED lighting to triple pane windows. Eagle OZ buildings are all walking distance to the metro, making it easy for our residents to commute to jobs anywhere in Chicago. Catalytic growth is coming to Bronzeville with $10 billion of economic development and 55,000 new jobs breaking ground this year. We invite you to join this wave of catalytic economic growth and appreciation. Thank you.
Wow. All right. Let's go to our lead judge.
I think that in this space, it's really just been over the last 2 or 3 years that the numbers have really worked to be able to, provide new construction with great rental returns and resale. In this space that we're building in, there's a tremendous amount of construction activity from single family homes to condo building. And right now, the 3-bedroom, 2-bath condos are building similar to these as apartments. These units are selling between $325 and $350, some as high as $365 a unit. So we see these numbers continuing to increase from our suppliers, from windows to lumber. Thank God lumber has come back down, to close to where it was before. But copper is twice as much as it used to be. But we get some economies of scale on our labor, and so it tends to offset some of those increased material costs. And so we're able to keep our costs in check.
What kind of rents are you projecting?
We are forecasting an average rent of $2,400 a month versus the market rent of $2,500 a month for new build 3-bed, 2-bath units in this space.
There's just a tremendous amount of activity of people, moving from the north side and the business district into this Bronzeville area. It's right along the lakefront. There are 2 train lines that run right downtown into the business district. There's also not much vacant land in the city, so this is kind of one of the last frontiers where we can find these scattered site vacant lots where we don't have to tear down a building that's connected to 2 other buildings. And
what's the average square feet of the units? You said these are 3 bedrooms, right?
1,430 square feet. And check out these neighborhoods, check out these building sites, and kind of see what we're doing. It's a pretty incredible place to develop them.
So up next, we have Saxon Real Estate with Chad DeBolt. Let's take a look at your video.
I'm Anthony Rinaldi. I'm the founder and managing principal of Saxon Real Estate. Saxon Real Estate is a national, vertically integrated real estate investment and development firm. Saxon specializes in a variety of different asset classes, but predominantly focuses on value add and development opportunities here in the United States. Over the last 3 years, the firm has grown exponentially. In COVID alone, we've grown the team by 25%, and our assets under management has more than doubled. Today, the firm sits at nearly 30 professionals. We have over 7 million square feet across the country and over 1.5 billion in current assets under management.
Hi, I'm Chad DeBolt, Managing Director and Principal of Saxum Real Estate. We launched one of the first Opportunity Zone funds in mid-2018 and allowed us to win top 25 Oz developer on a national scale from the Opportunity Zone Expo. We've executed over 100 million in equity investments into over 10 deals on a national scale. We expect and anticipate those exit valuations on those deals to total over 500 million in valuation. Saxum had numerous goals with embarking on the Shadyside project. The first goal being that we want to be a first mover in the Austin market. We successfully achieved that goal by being the first Opportunity Zone developer to break ground. Second, we wanted to activate the local neighborhood. And we believe in our development so much that we actually moved Saxum's corporate headquarters to Austin, Texas. Finally, we are proud to say that we successfully delivered Shadyside on budget and on time despite the pandemic. In regards to job creation, we believe we've created upwards of 10,000 jobs across our 10 projects. In terms of ratables, revenues for the local tax authorities across our 10 projects, we estimate that to come in at approximately 10 million in revenues per year of taxes off the buildings we have built. For Shadyside alone, that's approximately $400,000 in revenues a year, which goes directly back into the community. Of the $20 billion that's been raised to date for Opportunity Zones, less than 1% has went into non-real estate qualified Opportunity Zone businesses, and we hope that we could change that.
We were intentional about using local third-party design firms to ensure that the essence and creativity of what makes East Austin unique was captured in our project. The project is highlighted by its Corten steel facades, abundance of natural light, and the freestanding home, which is the only historic structure on the project. Reutilizing the old house and bringing a local bar and restaurant to act as an amenity for the project was of critical importance to Saxum. East Austin is the fastest growing submarket in America's fastest growing city. With 170 people moving to Austin per day, East Austin is seeing a disproportionate amount of those young professionals moving and wanting to locate and work in that environment. Since delivering Shadyside to the market, nearly 1,300 multifamily units have either been delivered or approved for the next 2 years of delivery. Currently, we are about 25% leased and working our way with active LOIs and leases well above 50% leased. We have a specific focus on marketing towards companies that may be able to benefit from the Opportunity Zone program, including an office tenant that is currently near signing a lease and will employ all of the tax benefits associated with Opportunity Zone investment. Shadyside is uniquely positioned geographically in the East Austin submarket, being located just a half a mile away from the 183 toll road, allowing drivers to circumvent downtown Austin and go from Northwest Austin down past the airport. Project Connect, a $7 billion infrastructure bill, will connect the suburbs of Austin to downtown Austin and will make projects like Shadyside accessible to downtown Austin. Our goal for Shadyside was to bring a dynamic mixed-use environment to help reinvigorate an exciting, growing neighborhood. And across the train tracks, a new 875,000 square foot mixed-use development has been approved by the city. In utilizing a lot of the native elements of what makes East Austin unique, Shadyside is poised to become a central hub of an exploding neighborhood. In 5 years, it's easy to see Shadyside 1 and Shadyside 2 fully leased and stabilized, bringing office and retail tenants and walkability to a blossoming residential market that just 10 years ago was vacant lots and abandoned homes. We are currently leasing the first phase of Shadyside, and we are in the process of approval for a sister building to be located across the street from the existing project. Saxum is undoubtedly one of the fastest growing private equity developers in the country, but we've maintained a unique family-like environment and an environment where we love working together every day.
Hey, let's bring in Chad DeBolt. And let's throw it over to the judges.
What do you view as your biggest strength? And also, what is your biggest threat?
Yeah, so on the strength side, our view is really the fundamentals, and that's really what market are you in? People are typically surprised to find out that Austin has opportunity zones as a number of the larger cities in our nation do. But we really looked at that as an opportunity because when you look at Austin, there are areas of Austin that are still in growth mode and are, again, growing at very high rates and have the ability for us to come in and do what we do best, which is create timeless real estate, while at the same time impacting communities in need. In terms of potential weaknesses, let's just call it what it is. This is an office building. And office is typically, and retail, are two of the hardest hit sectors during COVID. With that said, though, as you heard in our video, we built this building on budget, on time during the pandemic, despite of that.
When you're talking to your investors and you're giving them the information on the ROI, tell me a little bit more about that.
When we think of projects, again, the key is can you build it at the right cost and can you buy it right? We bought the land right here. We got a great value. We were one of the first Opportunity Zone funds to launch in the nation. So we had good basis going in. And usually people say you make your money when you buy. So we feel very confident with our basis.
Next up, we have Anthony Nanula at Sinatra & Co. Let's watch the video.
Steve Rinaldi, president of the Erie Canal Harbor Development Corporation. The Buffalo waterfront has been part of the community's agenda for decades. About 15 years ago, the community got together at the state and the local level and created the Erie Canal Harbor Development Corporation. And since that time, we've invested over $150 million in public infrastructure, putting in new streets, new utilities. We were able to recreate a lot of those pieces of the Erie Canal itself. The most important piece is to bring people down to Canal Side, living and working there 24/7. The Sinatra Company has a really strong and long history here of redevelopment in the city. They focused a lot on preservation work. So when they came down to Canal Side for a new build, but with that same attitude, we were thrilled to see that proposal. The organization itself gets an annual funding stream through the New York Power Authority. Part of the resettlement for them to continue to operate was to put money in specific pots to be used by the community. So we've taken that funding to build the public infrastructure here at Canal Side and along Buffalo's Outer Harbor. So allow people to come and live downtown and partake in the rebirth of the city of Buffalo.
Hi, I'm Anthony Chang, and I'm an investor in Heritage Point. We had capital gains coming out of a property that we sold last year, and it was just very interesting how Sinatra was able to leverage public incentives along with brownfield tax credits and the OZ program so that investors like myself, in just 4 years, were able to get almost all of our initial capital and some profit. Another reason why we invested in Heritage Point was because it's a transformational project for Buffalo. It's not very, very common that you can have a real estate development that not only makes money, but is also good for the community, creation of jobs, and something that's going to change the face of a downtown area.
Hi, I'm Nick Sinatra, founder and CEO of Sinatra Real Estate. We're the developer at Heritage Point at Canal Side. It's a phenomenal project. It's one of over $150 million worth of development we've done and have in the pipeline here for Sinatra Real Estate. We're a community-based development company. We love Buffalo. We're all about Buffalo. So we really love this Opportunity Zone space. And this is our second Opportunity Zone development project. It's $40 million. It's traditional mixed use. It's going to be workforce housing, affordable housing. There's going to be some great experiential retail on the first floor and some office space, which will be some of the premier office space in downtown Buffalo. It's going to lease itself as it's really the premier restaurant retail space in Western New York.
I'm Anthony Nanula, Chief Investment Officer of Sinatra & Company. As a Chief Investment Officer of Sinatra & Company, and as a former New York State Senator and the City Controller of the City of Buffalo, I have a unique perspective on the power of public-private partnerships. And New York State has done an amazing job with the Brownfield Tax Credit Program. We've been able, as a developer, to use this to really enhance the overall return of the project to the investor. If an investor, as an example, were to invest $1 million, they would receive approximately $1 million in Brownfield Tax Credit benefit. Buffalo is really seeing a renaissance that rivals its heyday at the turn of the 20th century. There have been thousands of jobs created in the city, in our medical corridor. Our largest bank, M&T Bank, is bringing thousands of jobs just a block away. Tesla has built their largest solar panel factory in the Western Hemisphere here in Buffalo. And we're excited to be a part of what's going to be the next phase of this renaissance down at Canalside. There'll be more reasons for people to both live, work, and play in Canalside, and to do so walking or maybe bike riding to where they want to go within the community versus having the need of a car. We estimate in excess of 100 permanent jobs after we're completed with construction. When you add that to the expected hundreds, if not thousands, of additional jobs that are going to be coming to Canalside, we see this as a very substantial catalyst for economic impact and job creation for Buffalo. The equity raise is $8.8 million. We've already broken ground on the project, and we expect to be completed in the spring of 2023.
Let's go to the judges.
What kind of housing we're building, how many units, how many workforce, office space, retail, just break down the project.
There's 61 residential units.
I believe we were talking about the economic drivers of the waterfront, and that's where things start to break up. Can you give me a little more color behind that?
Just on the other side of the highway is Seneca One Tower, which is now 1.2 million square feet of office space, and it's fully leased. It was formerly HSBC Tower, and a developer named Doug Jamal came into town and bought the property and landed M&T Bank as an anchor tenant. And they're building their tech hub for the entire bank out of that tower. Is it bringing $100,000 and up jobs to downtown Buffalo here in Seneca One? But it's also creating a tech hub inside that complex.
Talk to us again about the current existing supply in the marketplace, just to gain a better understanding of the supply-demand dynamics right now. I mean, because that, to me, sounds like a game changer. And correct me if I'm wrong, I thought I heard 1.2 million feet. I mean, that's a lot of jobs.
There's an argument here that we need probably in the range of 1,000 to 2,000 units in the short term, just to catch up to the demand that's existing. If I could add one more element, just while we're talking about the location in Canalside, Canalside itself has become a regional tourist destination, and it's drawing upwards of 2 million people a year now in a 4-season setting.
Sandy Schmidt at Starpoint Properties. Let's take a look at your video.
Good afternoon. My name is Michael Farag from Starpoint Properties. I'm the Executive Vice President and one of the owners of Starpoint Properties. Starpoint is a vertically integrated real estate firm. Our focus has always been multifamily. Across our portfolio of 60 properties, we have returned about 25% IRR to our investors, which has been a tremendous amount. Starpoint has been in business since 1993, and we've got about $1 billion of our assets under management.
Hello, my name is Sandy Schmidt. I am the Director of Acquisitions and Development at Starpoint Properties. Our Locust project in downtown Long Beach is a prime example of the strategy. It's on a major arterial that feeds straight out to the 710 freeway. There's hundreds of thousands of jobs within a 30-minute commute here. We're taking an old Firestone tire shop that's vacant, and we're tearing it down and putting up housing in a market which is famously housing constrained. We all know that affordability is a real issue. There are significant barriers to supply in the Southern California market. This is a chance to create housing, create construction jobs, permanent on-site jobs, and really have a positive impact on the immediate neighborhood. Locust will be another project performing well, but also have returns which are significant impacts on the community in the form of social benefits and environmental impacts. Our building will be equivalent to a LEED Silver building. We'll also use sustainable materials, sourcing local materials as we can, and asking that a portion of the construction contracts to go towards minority or women-owned businesses.
My name is Neil Sherlock. I am the Vice President of Capital Markets at Starpoint Properties. Locust is actually the third Qualified Opportunity Zone project that we've done. We are a fully integrated real estate company that offers institutional discipline and access to institutional quality real estate projects. But at the same time, we maintain that entrepreneurial vision that we've had since the start of the company 25 plus years ago. Our Locust project, once constructed, will be a 7-story, 108-unit Class A multifamily structure with approximately 1,200 square feet of retail on the ground floor, along with 135 parking stalls between 2 above grade and 2 subterranean levels. Smart Growth America named downtown Long Beach as one of the most attractive multifamily markets for rental growth in the coming years. We think that given the infill location, that this is just a very strong probability of success project for us. Locust is approximately a slightly south of a $50 million total capitalization project. We expect to finance it with approximately 65% leverage and about 35% of equity. Our total raise is about $18 million that we're targeting. And the return target for our investors in this vehicle are approximately a 15% IRR and almost slightly under a 3x multiple on the equity side.
Hi, this is Evan Farnick, one of the principals of Starpoint Properties. I manage the commercial parts of our business, oversight on retail and office, on construction, development, leasing, and overall management. I've been at the firm for a little over 18 years, and what we focus on really are value-add opportunities that can consist of either development or value add, where we create opportunities on underdeveloped or underperforming assets.
Hi, my name is Michael Trennan. I'm the Chief Operating Officer and General Counsel for Starpoint Properties. I can speak from the fact that this is probably the most tax advantage program that I've seen come across, likely since the 1031 and maybe even greater than that. This is the only program I've ever seen that is an elimination of tax. If you invest by the end of this year, you're going to get a 10% reduction on the taxes that you would have otherwise paid. The ability to invest in anything that says beach in California is probably a good starting point for any apartment investment. You're talking about the Long Beach area, which has 15% discount to rental rates in surrounding communities, historically high appreciation in rents. It really does present a unique opportunity to take advantage of an incredible program.
Thank you so much. All right, Sandy, let's head over to you and the judges.
California, of course, does not follow the federal rules for qualified opportunity zones. California, you don't get the state income tax break. Are you seeing any pushback or reluctance on the part of investors because of that fact?
The answer is no. We're not seeing pushback from the investment community. I think what they understand is that this is coastal California real estate. It's supply constrained, and it's there's a structural imbalance of supply and demand here.
Did you do a community impact study before you went into this project and invite the community in to actually comment?
We did, actually. We met with the local North Pine Neighborhood Association, and we've had multiple meetings with them to talk about our project and what it would do. And they actually wrote a letter of support for us, which was really nice. It wasn't expected, and you're in infill urban development, and it's usually in the trenches with everybody around you. But this wasn't that kind of process.
So as far as your timing to break ground, where are you at in that process, and where are you at with construction lenders?
Construction timing, we're shooting for a late Q2 construction start.
How are you looking at managing this property? Are you looking at putting an on-site manager? It's kind of small to run just by itself. Are you going to tack that onto a building next door? How are you looking at that?
We actually have some efficiencies here. There will be an on-site leasing office. We self-manage our properties. We have a portfolio of 800, most of which are already in Southern California. So we'll be able to find some economies by self-managing, property managing the property.
We are going to go to our next contestant. This is the Florida Lakes RV Resort, and we're here with Ed Reimer. Let's take a look at their video.
Good afternoon, my name is Ed Reimer, the owner of Reimer Companies. I've been in the development business for approximately 40 years. The last 12 years I've been focusing in Florida on developing RV resorts. I've had some very good success on my first couple RV resorts I developed, and my current project that we're talking about today is called Florida Lakes RV Resort, located in Highland County, Florida. And the reason it was named Florida Lakes is because Highland County has 100 lakes. Florida Lakes is going to be a very, very unique RV resort with some very unique amenities: lap pools, swimming pools, pickleball courts, an oversized clubhouse with stages and all types of activities. One major one is the Sebring 100 that has been bought out by NASCAR. Golf courses in the surrounding area, and the city of Sebring that has all the retailers and restaurants and services that anyone would need. There will be a very, very unique feature in Florida Lakes RV Resort, a very unique amenity, which will be 2 bowling lanes. And I've never seen that done before in an RV resort. Florida Lakes RV Resort is in an opportunity zone in Sebring, Florida. It's a huge benefit to the community financially. $27 million will be generated into this community by this development. I'm starting out with 562 sites. You know, you're over 1,000 people in there. Those people spend dollars in the restaurants, all their retail stores. Millennials got into our business because of the mobility of being able to work from anywhere. 12 years ago, approximately 80%, 85% of all RVers were transient. There is much, much more permanent RVers today. It makes it an easier operation, less maintenance, less management required. The demand is mind-boggling. Of every RV resort in the state of Florida is full during season, 100%. And the risk is extremely mitigated once you get them built. When COVID first started, our businesses went up. The demand was even greater. I've been investing, developing, and redeveloping for close to 40 years. I have never seen an opportunity as good as RV resorts. Construction is relatively simple, as it mainly involves infrastructure work and no vertical buildings other than a clubhouse and the amenities. All of Reimer Company's previous RV developments have been extremely successful. Florida Lakes is unique in the fact that it's located adjacent to a city of Sebring. RV developments are a great asset class with a proven history of surviving COVID and surviving recessions. The community gets a huge benefit out of this, with ancillary dollars in over a 5-year period in the approximate amount of $27 million because of the development, and the investors, because of the opportunity zone, getting the deferment of some of their capital gain and the elimination of gain holding it for 10 years. So I can't imagine a better investment in Florida Lakes, an RV resort in a state that has a net migration. People are continuing to come here and come here. There's not enough RV sites in the United States for the demand. It's good for the opportunity zone, it's good for the community, it's good for the investor, and it's good for me, the developer. It's a win-win-win. So I'm looking forward to this development. Extremely high demand for more RV sites. We'll be ready to start the first quarter of 2022. In closing, Florida Lakes RV Resort is a unique opportunity. It combines one of the best current real estate assets with very aggressive tax benefits.
Let's move this over to Ed. Welcome, Ed, and let's welcome our judges back.
I see the market extremely strong as that happens, enhanced for rental. I've followed the large companies over the last couple of years acquiring institutional companies like BlackRock, acquiring single-family homes for the very reason the question you asked. We see a lot of pressure on affordable housing in the foreseeable future, and we see a lot of the rental markets increasing dramatically.
Is this short term, or how long are you anticipating the residents will stay?
Well, about 12 years ago, it was mostly short term, probably about 80% transient RVers. They go to Yellowstone with their family, they go somewhere else. Today, I'm going to say it's almost reversed, where most of the RVers or park model renters are permanent. A lot of the resorts existing across the country up until the last couple of years are very old resorts and are outdated. But when you build these new ones, with all the new amenities, the lap pools, the pickleball courts, it becomes a destination place because of the mobility of work now. They go back and forth from where they live up in the Midwest or in Canada or even other parts of Florida, and they come down here off and on throughout the whole year.
I think most people don't realize, over 500,000 RVs were sold, over the last year, almost 1 million since COVID started. And I think now there's probably, and you probably know best, but about 10 million RVs across the United States. But what do you foresee that shifting demographic? 50% of RV owners are under the age of 50. How do you draw them? I think the bowling alley is an incredible idea. I was waiting and kind of writing down a couple things with the clubhouse, but how do you fill up and get some of that revenue going in the off season?
I would say in the state of Florida, we would estimate our summer occupancy months as the lowest months for rental at about, we'd be happy at about 10%. I'm going to say today it's at about 35-40%. And most of that increase is within the last 3 years. Well, to our surprise, like you just mentioned, the average age has dramatically dropped. And I think the millennials now take up about 25% of our renters. Again, because of the mobility of work, the opportunity zones want to happen in a community, especially by the economic impact of 1,000 people at about a 70% occupancy level year-round here, spending dollars in the community. It's mind-boggling, and it's worked in every one of them. I can take you to communities where I've opened up a couple of these places, and you're put on a pedestal for what it does to the businesses in the community. It's mind-boggling.
Give us an overview real quickly, just of the financials. I love the fact that there's not a ton of capital outlay and CapEx in terms of initial construction costs. What does that look like in terms of your capital stack to start with? And what do you expect for kind of untrended yield on cost and then total IRR for project level? Thanks.
Without regard to tax benefits, I'm going to say the total IRR is approximately 19%. That includes a 8% pref to the investors. It all-in project. This development's about a $27 million project. I've projected in the private placement memorandum a 40% equity to debt. I think I can do better than that. So that would mean a capital raise of approximately $9.5 million to $11 million, somewhere in there.
I was a big supporter of opportunity zones in Congress. I'm excited to see all these great ideas coming in that utilize this mechanism.
Yep, thanks for supporting it.
We have our next contestant. This is going to be Hornell Assisted Living. Let's take a look at their video.
Hello everyone. Let me introduce the founder of our project, Major Gurjit Singh, who served in Corps of Engineering for 21 years. He is master in engineering and has completed many sensitive engineering projects. He is licensed in finance and real estate, and he is a seasoned business person.
Thank you, Sergey. Please meet founder of our project, Mr. Sergey Vershinin. He is PhD in law and very successful business person. He owns several companies with an annual turnover of over $50 million.
Let me present you our assisted living facility project. As America ages, it goes without saying that the assisted living business will be blooming for the years to come. It's no wonder we see the new facilities popping up all around us, most of them doing quite well. Many investment groups and private owners are building their new locations and expanding the facilities they already have, all to meet the ever-growing demand. So the life expectancy is increasing every year with the revolution and innovation in medical science. The question is, what to do with an extra 40 years? With baby boomer getting older and an average 10,000 seniors are crossing age of 75 every day, who need tender care in their own space. They are looked after 24/7. Silver tsunami is on horizon, and it's time for action. We don't have adequate assisted facilities to match this demand for the next 30 years.
In our project, we intend to take care of all seniors and will provide them the facility to suit their financial capabilities. We will also use technology and create a facility that will resist the spread of the virus as happened during the pandemic. Safety in senior care is our main mission. Our project is located in the beautiful upstate of New York in the city of Hornell in the Opportunity Zone area. City of Hornell is close to Niagara Falls and it is called US Switzerland for beautiful green rolling hills, clean fresh air, lots of natural beauty. We are converting a former hospital to assisted living facility. It has 260,000 square foot of existing building and over 130 square foot of parking lot. The facility has its own helipad, which is just 18 minutes flight from Manhattan. We will have dedicated deluxe bus service from New York City to Hornell for the families to visit their parents and also enjoy a game of golf in Hornell or visit Niagara Falls. We also intend providing living accommodation for visitors for overnight stay.
Our project size is $20 million, which includes $10 million for the acquisition and $10 million for the renovation. The conversion of this facility will consist of over 200 beds for assisted living and 100 beds of nursing care facility. The current rate per bed per month for assisted living is $5,000 to $7,000, and for the nursing care bed, it's $12,500 paid by insurance companies. Assuming a 30% vacancy, we project our annual gross revenue over $20 million, which brings our project to a very high and stable profitability. We plan 1 year for the plans and permits and 1 year for the renovation construction work. The return to the investors, as planned, will be at the beginning of 25th month. Projected rate of the return is 12% for preferred investors.
Taking into consideration of such high demand of assisted living facilities in the United States of America, and steeply rising real estate values. This project is very secure and profitable for investment. We are welcoming all the investors on board. If you have any questions, please feel free to contact us.
Great. Let's turn this over to our judges.
I have a question I can probably lead off. What is the name of the operator that you plan on using?
We are finalizing it. We are having more than one operator shortlisted with all the experiences. We are yet not finalized.
We are going to go to the Verte Opportunity Fund. Let's take a look at the video.
I'm Len Mills with the Verte Opportunity Fund. I'm the CEO and founder. The Verte Opportunity Fund is a venture capital opportunity zone fund. We invest in early stage companies that are having an impact in their communities. We currently have 10 companies in the portfolio. You're going to see 3 companies today. The type of companies we invest in include robotics, medical devices, animation and virtual reality games, building materials, data storage, clean tech, climate tech, green tech. All advanced technologies are the types of companies that we invest in. We believe in innovation. It's another part, a key driver of economic development is innovation. We invest in urban areas and rural areas. We have a number of minority founders. We very much believe in human capital development, along with financial and tangible property development. All of these companies are located in the Baltimore, Washington, D.C. area, which is one of our investment areas, but not exclusively to that area.
My name is Trevor Price, and I'm the CEO and founder of the Outlook Company. We are what the future media company looks like. We started out with 10 employees. Where we are now, we will be at 600 here in the next 6 to 7 months. We're making 3D films, we're making 2D film, we're making a game, we're making a secret project for Viacom. And the more we bring the Viacoms and the Netflixes and the Hulus and the Disneys back into this city, the impact is not just monetary. COVID has washed every media company up onto the beach. So we're all starting at the same point. What you build with that sand is going to determine how profitable or how long your company lasts from that point on. We are now on the point that expansion is needed. And as expansion is needed, the company grows in value. This is what we are, is what movie studios and content companies are going to look like from this point on.
Hello, my name is Glenn Glad. I'm co-founder, CEO, and president of Access Optical Networks. We're looking to dominate the memory industry. Electromagnetic technologies like flash and disk and tape read and write data serially. That means they read and write 1 bit at a time. We read and write optically, and we can do that in parallel. So in the time that it takes to write and read a bit, we can write 1 billion bits. People are talking about developing other technologies. We're developing the computation and the memory technologies to make that happen. I view the opportunity zone investment by funds like Verte to be preferable to venture capitalists because there's a very clearly designed exit. And that enables the business to take a look at that and develop a plan that will meet the collective needs.
I'm Dave Saunders. I'm co-founder and chief technology officer of Galen Robotics. We were originally approached by Johns Hopkins to take a look at some of the technology that they had been working on in-house to create a platform technology that would be able to support a wide variety of surgical procedures and eventually be able to adapt to other environments in the operating room. So here's just a small assortment of some of the instruments that we've already done experiments with. We've got bone drills, we've got pedicle screwdrivers, we've got very long instruments for doing laryngeal procedures. So this would actually be going down your throat. And so any little tiny movement here translates to a much bigger movement down here. What if we could just hold that instrument, and just by doing that, we can stabilize the instrument? Because without some kind of assistance, even your own heartbeat can actually flick the end of the instrument. The platform that we're working on is really a jumping point for bringing machine learning and artificial intelligence into the OR. It's not about the technology for technology's sake to me. It's about, what do you do for people once the technology exists?
What you've seen today is the passion that all of these companies have. We want to leave a legacy in the opportunity zones with respect to the types of investments we're making, the growth that they're going to engineer, and the impact that they're going to have in these cities that traditionally have not gotten a lot of the funding, like Baltimore.
Okay, let's turn this over to Len Mills and our panel of judges.
How do you make a determination on the types of ventures you're going to fund? I mean, I know obviously there was a media company in there with a medical device company. How is that dictated, and what do you typically do in terms of size of investments? And I assume all this is seed investments?
It's early stage investments that are characterized somewhere between a seed and a Series A. It would depend on the business. We have 10 companies, so there is some variation. How do we decide what we're looking for and what the fund is structured around, and is long-term returns? So we're early stage investors. We're looking for people and ideas that are big ideas.
When you talk about geography, is everything based in the Baltimore metro area, or you're looking outside of the Mid-Atlantic region?
Yeah, we're definitely looking outside. We're really a nationwide firm or fund. For purposes of filming, we needed to be in one location. We have done a number of investments in Baltimore. One of the persons that came down drove down from New Jersey. But we have investments in Arizona, New Mexico, Missouri, Illinois, Florida, South Carolina. I think that's about it, but we're really spread out. We're an opportunity zone fund. They're all individual businesses, so they're really single locations for each one. We don't have a lot of complexity in those investments. So I mentioned 10 companies, and that's why we have 10 locations. Each company is located in a single spot.
If we were to come in now and make an investment, and we do a lot of private equity investing at a fund level, how does it work in terms of gaining exposure to the other deals that are already in the portfolio, in terms of kind of having a peek or a little bit of a look now at what the portfolio is comprised of versus investors that might have come in 2 years ago before any capital was previously allocated?
Yeah, we're really structured as a evergreen fund, if you will, and what that means is any investor that comes in now gets access to those 10 companies already, and also any potential companies that we hope to invest in.
I'm curious, when you're looking at job creation, do you have a particular percentage or particular number in mind when you're looking at the businesses that you may in fact invest in?
Well, we're looking for the companies to grow, and they will naturally grow with the employees will naturally grow. Again, we're early stage investors. So the companies may have, it depends on, again, we have a range of companies. Some of them are more mature than others. But, as a general rule, they all have very ambitious employment goals that they hope to see over the next 5 to 10 years. Again, these are long-term investments.
So I do have to ask you, what in your view, if you can tell us, what is the downside of being part of a venture capital fund versus a single project fund?
Well, if you think about these businesses, the biggest risk to them on an individual company basis, the biggest risk is these are startup companies, emerging companies, and fundamentally, and we present that in our pro formas and the like, is that fundamentally there's going to be a percentage of these, unfortunately, that fail. that they literally go out of business. And we put an investment in that specific company, and that investment returns nothing. We don't even get our money back. So that's the risk on an individual company basis. And that's really a key reason to run a portfolio strategy rather than a single asset strategy. So at the end of the day, we'll end up with 20, 25 assets. Our plan is to recycle as long as we can. We're, again, in it for the long haul. If we have an exit inside the fund, we're actually structured as a corporation, not a partnership, so that we can have more flexibility to recycle inside the fund, at least through 2026. The ultimate tax benefits around the program that goes out to 2047. So we're planning for the long haul. Most of the companies, not all, but most of them do not actually own the building. So it has a very small real estate component to the portfolio. You pretty much think of us exclusively on the business side. We're not a hybrid or anything like that.
We have An Mei from Nomadic OZ. Let's see your video.
Hi, I'm An Mei, and this is Shepard Ross.
And we are Nomadic OZ.
We are social entrepreneurs and small business incubators based in Houston, Texas. Food halls are changing America from the ground up by creating a shared vision, curating for success with little direct competition, and fostering a community of mentorship and collaboration that increases success rates for hyper-local startups.
As a hospitality company coming through the end of a pandemic, what we realized is that there was strength in numbers. All of the vendors that we fostered in our environment collectively were able to work together to make it to the other side. What a lot of people don't realize is that the small business hospitality companies, the mom and pop restaurants throughout the United States, the small business entrepreneurs in hospitality are the backbone of the hospitality industry, the largest segment that entertains and feeds the public. We provide a platform that's proven to make these businesses successful and to share in their growth across the United States.
So coming out of the pandemic, we felt that there was a need for someone to be the change, create a platform for small business owners to thrive. And we are providing that change through our food halls, our market halls, our container halls. We are scaling nationwide. We are allowing these small business owners to start a business at a fraction of the cost of any other brick and mortar endeavor and allow them to collaborate and be a part of this community.
Utilizing our platform, 90% of our vendors at Bravery were able to scale to their next venture within a year to one or more locations.
Nomadic OZ is the first hospitality OZ fund, raising over $50 million from Opportunity Zone investors. The fund will invest in food halls, market halls, container halls, breweries, wineries, wine bars, healthy food concepts, and other scalable restaurant concepts. The first phase is proof of concepts, which is what we're doing in Houston, creating different models. Phase 2 is when we scale, utilizing and leveraging high TI deals, allowing us to invest into people, real estate, manufacturing, tech, and other competitive advantages.
Phase 3 is when we capitalize on the infrastructure we've built. We will flip the script from our blitzscaling phase and sign low TI deals with better rental rates and expand our real estate holdings.
In order for us to scale to 260 food halls in 10 years, 70% of our food halls will be in opportunity zones, while 30% will be in prime locations such as New York, Miami, Houston, Austin, Dallas. In the opportunity zones, we will be focusing on HBCUs and other colleges where we would incubate new entrepreneurs, new brands, new concepts, creating a program that students can get credits with the university. Our multi-sided marketplace will allow entrepreneurs to get on this app and actually build a business over time, opening multiple restaurants in our halls, allowing for unified delivery where a user can order from multiple restaurants within one hall and pay for one delivery fee. The Opportunity Fund will invest not only in our food halls, but any one of these concepts that are successful, we can actually help scale them and have multiple exits over 10 years. Our strategy to scale is by aligning with other Opportunity Zone funds, working with HBCUs and other developers. Investing in Nomadic OZ is investing in what you love and also making an impact. We are redefining hospitality in a post-pandemic world. Invest in Nomadic OZ as we prepare for the next roaring 20s. Invest in Main Street, not Wall Street.
Let's go over to May, who's CEO of Nomadic OZ, and let's talk with our judges.
Yeah, so we focus on small businesses and first-time concepts and sometimes first-time business owners. And so what we do is we look for stories, we look for passion, we look for talent. And we don't always necessarily look for credit or certain things. And then what we try to do is we surround them with other things like coaches and mentors and things like that to help them be successful. And so the only way we can do that is through an app that will allow us to find the data and find, for instance, if we were to go to Asheville and there were a lot of farmers and a lot of artisans and makers and artists, and we would probably put a market hall into that development. If you were going to El Paso, for instance, you probably wouldn't put a high-end chef hall. You would put in a little bit more casual, smaller food hall. We know everyone here, and so we're really in tune with the industry, and so we know who the up-and-coming chefs are. We know who's looking for another opportunity. We know someone that's unhappy at a particular restaurant or such. But to go to El Paso, where we don't have boots on the ground, the only way we could do this is through an app. And so this app is basically for the industry as opposed to Yelp, which is an app that we feel was made for food critics.
What kind of a term are you really expecting for these first-time business owners in your food halls? Are they staying for a couple of years? Are you year-end training, offering in all of their support and helping them move on? Just help me understand that process.
A good example would be we have a sushi restaurant with two partners that started with us. So Bravery Chef Hall, for example, are chef-driven restaurants. They are 3-year lease models. In the first year, Kokoro had already learned about their business. They had never operated before. They'd only worked in kitchens before. They didn't even really have to handle their labor costs before. But in learning how to manage their P&L, their cost of goods, their labor, managing paying their bills, learning how to buy, learning their PARs, they were actually able to sign a lease outside of our hall, outside of our network that they were growing in, and they scaled within that first year to the second location. Now they're scaling to 2 additional locations with what they've learned in the process. And these were first-time operators with 0 experience running a restaurant. They simply had the talent and the chef skills and the raw culinary talent to show people what they can do.
So it's important to note that we definitely want them to grow within our network, but we're perfectly happy with them growing outside as well. And using our fund, we could potentially invest in them as well as they take that next step.
Are the structures themselves always permanent, or can they be put up and taken down maybe for seasonal use, that kind of thing?
We basically can put a hall in almost anything, and so we have repurposed warehouses. We're also in an amenity floor of a Heinz building, and then we're looking now into modular construction, container-like structures
And so it's a very flexible. It didn't really matter to us what the actual hall is. We can always make it a point of interest in a community meeting place.
But we do have that model that we can move around on shorter term leases.
We have Marguerite Perret, and she is from the North Country Growers. Let's take a look at the video.
Keep the music.
My name is Powers Miller. I'm a principal and founder of Musictown Development Group. I've been involved in real estate and real estate investing for about the last 30 years. I'm also established in the music industry and an equity partner in Chicago-based RTS Music. I'm being filmed at a music studio on the west side of Chicago, which is where Musictown is located, and music is one of the economic engines that drives our whole plan. So today we're here to talk about the Musictown Opportunity Fund. Our whole strategy begins and ends with economy. Economy, jobs, and businesses. The makeup of our 15-year plan includes several elements of a quality of life plan that was created by the community members itself. It involves some catalyst projects to bring economy into the neighborhood. There's 3 catalyst projects that will set the basis for the plan's growth and regeneration, we call it, of the west side of Chicago. The 2 catalyst projects that I want to talk about today are the Chicago Music Experience and Chicago Music Hall of Fame. Musictown is the only opportunity zone that provides the community itself equity ownership in key economic engines of the plan. Chicago Musictown is designed to tap into and grow Chicago's enormous tourism industry, and will do so by creating the world's largest walkable, multi-genre live music and entertainment district. The Chicago Music Experience will be a state-of-the-art interactive museum showcasing Chicago's rich musical history. Chicago Music Hall of Fame will celebrate famous Chicago artists and musical creators throughout Chicago's esteemed musical history. The goal of Chicago Musictown is to become the model for regeneration of disinvested communities. North Lawndale was one of the most densely populated communities in the entire United States. Shortly after the creation of the highway system, a lot of people in the urban markets were moving to the suburbs. Martin Luther King Jr. moved to North Lawndale in 1966 to base it as his headquarters for his movement. When Martin Luther King was assassinated, that there was what they call the Chicago Race Riot. And despite promises over the years to rebuild it from the city and other politicians, North Lawndale is really about the same today as it was in 1966. We are backed by A-list celebrities within the music industry. What the creators, if you will, the musicians, have sought to do is have more control over their own product and are working together to build the next generation music, entertainment, news, and social media platform. Imagine if you were a day one investor in Facebook and went to sell your stock in that today, the type of capital gains you would generate. That's really what we've planned for in this situation with the pre-IPO. Another piece that's part of our fund is a television show, a docuseries, which is about the making of Musictown. It's going to star a A-list Chicago music celebrity. It'll be a weekly television program that will feature a guest musical artist every week. Our fund starts with day one with an asset, and that's the trademark to the Musictown name. Every tourism item sold with Musictown on it will generate revenue for you as an investor of ours for our fund. By creating an overall entertainment district and owning the trademark to Musictown with the community, we're able to license out merchandise moving forward. Musictown and the entertainment district is being designed to accommodate at maturity, 300,000 to 500,000 tourists and visitors every month. Puts us in a situation to generate revenue like nothing ever seen before within a fund of this nature. We really wanted to take advantage of what I believe is the greatest tax incentive of the legislation, and that's the no capital gains after 10 years. The lowest projected internal rate of return that our real estate fund has is going to be about 16%. All of our funds are 20% annual return minimum, and we have a preferred cash return to our investors of around 7%. We are building with the most planet positive development approach possible. And that's in terms of green energy, sustainability, net zero. All of that is spelled out and will be spelled out in the offering memorandum that you'll be able to receive following this presentation. So for you as an investor, what makes Music Town so special is that your investment is backed by a 15-year plan designed to bring economy, jobs, businesses, and industry into the community, and was created in equity partnership with the community. We'll create a place where not only people want to visit and where people work, but where people want to live. Our fund is dynamic. We invest in real estate and businesses, and we have multiple revenue streams. Additionally, we offer turnkey 2 to 4 unit multifamily income properties that you can own individually as part of a single purpose qualified opportunity fund created for you by our law firm. These properties provide leveraged cash on cash returns in excess of 20% annually and enormous equity growth upside. So on behalf of everybody on our team at Music Town Development Group and on behalf of the West Side of Chicago, I want to thank everybody for allowing us to share our opportunity and vision for Music Town with you. Not only are we America's top project, I believe when it's all said and done that we have created the model for the regeneration and redevelopment of disinvested communities throughout the United States. Thank you and have an amazing day.
Okay, let's turn this over to Powers Miller and our panel of judges for our final contestant.
One of the things I mentioned on the video is we're dynamic, and we have a 15-year plan. I just want to touch on one thing you said with regard to gentrification, and our tagline is regeneration without gentrification. So if you want to ask a follow-up question on that, I'll be happy to. As far as the business model, I'm going to ask you a rhetorical question, but this is really for the audience out there, and this is really what we built into our mission statement when we began down this path, really about 4 years ago. And the question that we had internally is, what's the solution to a disinvested community? So what we really want to do is we want to partner with a community and focus all of our attention on that area, because the answer that we came up with, Craig, is that the solution's everything. Okay, every other opportunity, every other amenity that any other community has access to compete for should be available here. We're talking about an area right now that's a population, North Lawndale itself is 38,000, and then the entire west side area where we'll be branding Music Town is about 150 to 200,000 people, and we'll be investing over the next 10 years $2 billion in the community.
A majority historically that I know of museums and Hall of Fames are obviously they charge admission, whatever it is, $10, $15, $20, the souvenirs in the gift shop, but a majority of them are corporate backed by charitable large donations. How I understand the positive impact piece, I get the ESG. As an investor, if I'm an investor looking to allocate $100,000 or $1 million, where do the revenues come from and what are the expenses?
Basically, as it stands right now, you have to understand that the fund will be the landlord for the foundation that will run these organizations. And I'm glad that you touched on the philanthropic model, because we've been approached by a number of large philanthropic organizations who intend to work with us towards the construction of the facilities. So the business model not only includes the real estate piece with the rent, But as mentioned, and we charge admission and things like that. That will be done through the foundation, which will pay rent to the real estate fund, which will own the real estate portion of it. But we've also got the MusicTown trademark, which we're going to use to license merchandise. Whether you buy it at O'Hare or whether you buy it in MusicTown, we have multiple funds. We're dynamic. Okay, so kind of what I mentioned. We're so different than what anybody else is doing by partnering with an actual community and picture us as a developer. Picture the community as a developer. We have multiple revenue streams. So when I mention owning the buildings, the fund will own the buildings. Okay, the foundation, which is separate from an opportunity zone fund, will pay rent to us as landlords, just on the real estate side. But we also have other types of funds. In other words, as it's being set up, a person with $100,000, using your example, would have the opportunity to take $100,000 and allocate certain percentages to certain funds under our umbrella, including the pre-IPO fund, where we're partnered with an early stage venture capital for seed funding, Series A funding, and that's going to be a technology play that will be based in MusicTown. It's backed by some of the largest musicians in the country, Craig. You have to take my word for it, and it'll all be spelled out, so I wouldn't say it on here if it's not true. And what they're doing is they're using blockchain technology to take back control of their product. So it's going to be a modern day, I guess you could say, a new era platform. Today you can go to Spotify, you can go to other types of music platforms to download your music. But the actual musicians, the large musicians, will be equity owners in this.
So, after a hell of a day, I do have the winners, and the first award that we're going to be doing is the Most Impact Award, and I'm pleased to announce that this will be going to the Hornell Assisted Living Group. The Audience Choice Award for America's Top Project is Sinatra & Co.
The most impactful, according to the judges panel, is in fact the North County Growers. Last but not least, the top project, America's top project, is the Florida Lakes.
I couldn't agree more too. I loved both of those two projects you said. I was rooting for both. They had such unique, interesting qualities about each of their presentations. So I'm super excited for them. And just so you know, these winners will be featured highly in our next Opportunity Zone Top 25 Edition magazine. So be on the lookout for that. Thank you so much, everybody. See you soon.
Thank you for joining us. Please join us for the next installment of America's Top Project.